Let's get more on what this deal could mean for Microsoft. Let's bring in Jefferies' Jared Weisfeld. Jared, great to speak with you. You also think this deal makes a whole lot of sense. In terms of the synergies across the consumer business, what do you think this deal could enhance for Microsoft?
I think at the end of the day, the biggest takeaway should be from a Microsoft perspective, when you have the ability to go ahead and integrate a lot of the capabilities that TikTok has. You think about the technology stack that TikTok has, and it's incredibly sophisticated. So if you can then leverage that and marry that with some of the internal capabilities that Microsoft already has on Azure, which is the second largest cloud service provider on the planet, I think the capabilities are dramatic. TikTok knows what you want before you even know that. So when you leverage that with the AI capabilities of Azure, I think it makes a lot of sense. And then to the earlier point that was brought up, I think that's actually key. If you then have the ability to leverage that and bring it into gaming, bring that into Cortina, the digital search engine, bring that into Bing, I think the possibilities are quite significant. So it certainly makes a lot of sense. And obviously the stock market rewarded Microsoft today, and you've added more than the TikTok valuation in Microsoft's market cap alone today.
Is there a risk, though, that TikTok is the next Snap? I mean, in that Snap has run into user growth issues and monetization issues, or is finding a home in Microsoft gonna sort of bypass that possibility as an outcome?
It's a fair point, but you almost have a free call option. If you're Satya Nadella, you have the ability to go ahead and acquire the asset potentially on the cheap. And if you think about it, you've got one party, Microsoft, which is potentially the only party that's available to acquire something of this size with regulatory concerns. And then if you've got TikTok on the other side, they're obviously desperate from a seller's perspective. So valuation, I'm sure, plays part of it. And then strategically, if you think about the ability to go ahead and integrate the technology into the Microsoft stack, Satya's getting a free look at this. And not only can it potentially accelerate the growth drivers of his existing business, he then has a free call option on expanding the total addressable market to go ahead and think about competition versus Facebook and Snap, et cetera.
We swiped at the idea that China could retaliate for the U.S. forcing ByteDance to divest. Is that a concern of yours as you look out across some of the tech companies that you cover that operate in China?
I think that's a really important point, and there is a global chess match that's occurring right now. It's just not China versus the U.S. as it relates to TikTok versus Microsoft. You've seen the U.S. and Trump administration, from a Huawei perspective, get pretty entangled, and Trump has certainly made his priorities clear as the global footprint sets its stage with if you cross Trump's line on Huawei, you're effectively going against the U.S. And you're seeing that in China as well right now with SoftBank, which is a Japanese entity, which is trying to go ahead and potentially IPO or sell ARM, but then there are complications with the JV and that's sitting in China. So I think the China implications are real. I think that the potential for retaliation is real. So it does have to be delicate in the context of the geopolitical stage, because that is absolutely a consideration. Within
technology, are there certain subsectors that you think are most vulnerable, to China forcing some sort of action or divestiture? Is software perhaps an area that is most at risk? And if so, why isn't there any sort of discount valuation in these names?
Software is actually probably one of the best positions from a geopolitical perspective when you think about tensions with China, just given that a majority of revenue is actually derived domestically here in the States. To the extent that tensions flare up again between U.S. and China from a geopolitical perspective, it's the semiconductor industry that usually comes under a lot of attention. You saw what happened when we added Huawei to the entity list and the implications associated with that. So I would say, to the extent that that tensions flare up, you should absolutely keep an eye on the semiconductor sector and the potential implications there.
All right, Jared, great to speak with you. Thanks for your thoughts. Appreciate it.
Thank you so much.
Jared Weisfeld of Jefferies. Guy Adami, what do you say?
You bring up the point, Mel. I mean, again, listen, clearly the market does not care about this. I understand. But this is just one more salvo in this whole U.S.-China situation. And I understand this is probably not going to be a great analogy or a great sort of comparison. But what if the Chinese wake up and say, you know what, Apple, every Apple store in China you have to sell, otherwise we're closing shop. You don't think that's a possibility? I mean, maybe that's a little out there on the curve, but given what we've seen over the last 6 months, I don't think anything's impossible. So, again, Tim is spot on in terms of Microsoft. It makes sense. I'm not discounting that. my comment about style drift is exactly that. That's been a concern, but it doesn't mean it's not the right move. And again, the move in Microsoft today more than paid for this deal. But I think to your earlier question, I think this has far broader ramifications in terms of this U.S.-China situation.
There have been reports that the administration will announce measures against a broad array of Chinese-owned software companies. Tim Seymour, is this a concern that the markets are just looking past a little bit too much? I mean, we didn't think that we would get here with, well, maybe we did with ByteDance and TikTok, but maybe we're not taking seriously enough the possible retaliatory measures China could take against U.S. companies, which could really be, I don't want to say devastating, but it could impact valuations for sure.
Well, if you think about the companies that we'd be thinking about here that have the most exposure to China, it's really Apple, as Guy pointed out. But I'm not so sure that the valuations of Google and Facebook really reflect a significant amount of China. So you know, I'm not terribly concerned about that. I think the bluster and the focus on China and the common enemy and the things that, first of all, make a ton of sense. And I think are fair, but then also the dynamic of just the political salvo that's attached to this. I think that's what it is. Again, I think it's a case where, if anybody, Microsoft benefits from this and the stress around this, and by working with the White House, making it very clear, doing a public show of, we will make sure, and whether it's the capital markets revenues that need to be allocated or not, but that they're very clear, we will solve these issues with the government before we move forward, or there's no deal. I mean, what more can you do? And what more, you know, I think in this environment should they be doing? And I like the tactic.